PantheonAI presents $20 billion Saudi AI bet, Databricks buys Neon, Biotech booms market recap and crypto pullback. Welcome back to the PAI Morning Briefing.
Good morning, everyone.
I'm your host from PantheonAI, and today is May 14th, 2025.
Hope you're all settled in, maybe with a coffee, ready for a deep dive into the markets today. We've got quite a bit on the agenda, don't we?
We really do, from the latest data points and sector movements to some really interesting news-making waves across different industries. So let's just jump right in.
Sounds good. Let's kick off with a quick market snapshot. Looking at the S&P 500, it's sitting right around 5,885.41 this morning. We're seeing a slight dip there, about negative 0.192%.
Okay, so a little red for the S&P. How about the Dow?
The Dow Jones is actually ticking up slightly, trading near 42,189.53. That's a small positive change, roughly 0.09%.
Interesting mix already. And the Nasdaq, usually linked with tech?
Yeah, the Nasdaq's showing a small decline too, trading around 19,071.90, down by about negative 0.015%.
And for those tracking smaller companies?
The Russell 2000 is at about 2,091.76, falling a bit more significantly, nearly negative 0.22%. And on the crypto side, Bitcoin's around $103,357.64, down roughly 0.77%, while Ethereum is near $2,578.59, down by almost 3.79%.
So it feels like we're seeing a bit of a mixed bag, right? Some cautious optimism, some slight pullbacks, as investors are trying to process a lot of incoming data, both domestically and globally.
Absolutely, and sometimes these really minor fluctuations, they don't seem like much day to day, but they can actually set up some fascinating long-term trends. It makes you think.
Go on.
Have you ever just stopped to wonder how these tiny percentage changes across the board, when compounded over time, really impact your portfolio? It seems negligible daily, but these small adjustments are literally building the market's bigger story over months and years.
It's a great point. It's the long game that matters. Okay, so moving from the quick overview, let's transition into some of the bigger market narratives today.
Definitely, and one that's getting a lot of buzz, of course, is AI and related investments. There's this significant news around Saudi Arabia planning to commit a substantial $20 billion towards investing in U.S. AI data centers and boosting energy infrastructure.
Wow, $20 billion is a huge number. That's not just a small move. That feels like a deliberate strategic play.
It really is, and it's likely going to spark a noticeable uptick in AI stock performance. In a market driven by tech innovation, this kind of hefty, government-backed, cross-border investment signals that these large-scale initiatives are gaining real traction. It could actually redefine who the major players are in the AI industry.
So for tech investors, this could mean more revenue streams, more R&D capacity for AI companies. Though we have seen some headlines recently, like you can see AI everywhere except in big tech's profits, suggesting some skepticism about short-term profitability.
Right, that headline definitely got some attention. But if you look a bit deeper, investing in infrastructure like this, it can really alleviate scalability issues that tech companies face. That could translate into better margins and stronger market competitiveness down the line.
Good point. Infrastructure investment is often the less glamorous but crucial part of growth. Speaking of AI and tech, there's another big move. Databricks announced it's acquiring a database startup called Neon for roughly $1 billion.
Yeah, that deal really underlines the rapid integration between big data and AI. It's becoming absolutely vital as companies need to leverage massive amounts of data to train and improve their AI models. For anyone tracking tech trends, this kind of consolidation could be a sign of more acquisitions coming, especially as companies try to strengthen their competitive edge by owning more comprehensive data ecosystems.
Definitely something to watch. While tech and AI are grabbing headlines, we're also seeing some really noteworthy developments in other sectors, like biotech, for instance.
Oh, absolutely. There's significant momentum there. We saw one biotech company's stock absolutely rocket on an oral obesity drug partnership arranged with the parent company behind Wegovy, which is Novo Nordisk.
Novo Nordisk, a name most people will recognize, especially with their success in diabetes and obesity treatments. They're apparently working on incremental pathways in GPCR drug development, specifically involving GLP-1.
Exactly. And when you think about how long obesity and diabetes have been global health challenges, breakthroughs in this area could not only revolutionize treatment protocols, but also create a tangible upswing in biotech valuations. It really presents another angle of market evolution for us as investors.
It does. It makes you ask, how are we reacting to this intersection of healthcare innovation and market dynamics? Are we positioning our portfolios to capture these kinds of trends, or just staying on the sidelines?
Right? Each market movement is built on complex fundamentals, scientific innovation, regulatory shifts, market sentiment. They all combine to influence investor confidence.
Totally. Moving on, let's look at another angle of industrial transformation, but with a manufacturing twist. Kraft Heinz, yes, the ketchup maker, is investing a hefty $3 billion in upgrading its U.S. manufacturing facilities.
Kraft Heinz? $3 billion? That does seem surprising for a condiment company.
It does, but this is where the macroeconomic impact comes in. This move is aimed at driving efficiency gains, lowering costs, especially against the backdrop of rising tariffs we've seen in previous years. Improved production efficiencies in a major FMCG player like this can signal broader trends in American manufacturing, drawing parallels with other sectors facing similar pressures.
That's a really good point, and honestly, it gives a whole new meaning to squeezing the day with extra savings from operational efficiency that they can potentially reinvest.
Haha, nice one. Now, shifting gears slightly, we also saw an interesting technical analysis piece on the AUD-USD currency pair.
Oh yeah, that was noteworthy. The analysis reported that buyers defended critical support near the 200-day moving average, but momentum seems to be wading through waning bullish energy.
Right. The AUD-USD rally initially hit resistance near the 2025 extreme area around 0.65135 and quickly reversed. Now, as it tests vital support near the 200-day moving average at roughly 0.6457, it really offers a cautionary tale.
Absolutely. Even in seemingly positive market trends, technical indicators can flash signals that demand prudence. It makes you ask as a trader, are you recalibrating your strategies based on these signals, or are you doubling down on longer-term positions? It's always that delicate balance between sticking to your plan and adapting to short-term fluctuations.
It really is. Let's shift to a couple more exciting headlines. One intriguing story is about booking 130% profits in an outperforming financial stock.
Oh, that sounds good. 130% is a fantastic gain.
It is. And it was a decision apparently driven partly by discipline, related to the S&P oscillator. While it might seem like a complex trade, it highlights something vital. Disciplined portfolio management often means taking profits when targets are hit, rather than getting caught up in the frenzy and trying to ride it indefinitely.
That's such a crucial reminder for traders. Sometimes the best strategy is just securing those gains, even when the market's sending mixed messages.
Agreed. Another piece of news that ties into a broader conversation about portfolio diversification is the value in managing investment risk through alternative assets like farmland, timber, and other non-traditional investments.
Ah, yes. Alternative assets. They can be great stabilizers, especially when the stock market gets wobbly in these uncertain times.
Exactly. It really begs that larger question. How are you ensuring your portfolio is both resilient and diversified enough to handle shifts in equity markets? In times of volatility, alternative assets can provide that extra layer of security that traditional stocks might lack.
Definitely something worth considering. And speaking of things that are everywhere, we have to mention the continued buzz around AI impacting every sector.
Right. That headline we mentioned earlier, you can see AI everywhere except in big tech's profits. It might get a chuckle, but it highlights a real concern. While the AI narrative is huge, many tech giants haven't consistently turned these technological leaps into robust bottom lines yet.
True. That said, the environment is still rich with potential. For those who can separate the hype from the genuine value proposition, there are opportunities. It makes you wonder, is the AI revolution still more about future promise than current profitability? And if so, where should investors be focusing?
Great questions. In other significant news, PMGC Capital LLC, a subsidiary of PMGC Holdings, is set to file a Schedule 13D reporting a 5.09% stake in Alaunos Therapeutics.
Okay, so an institutional player taking a notable stake in a biotech company. That definitely underscores the idea that big players are actively repositioning themselves.
It could signal a shift in market sentiment towards biotech and other emerging sectors. For investors, this isn't just regulatory noise. It could be a strategic play by a seasoned participant, offering insights into where future capital might flow.
Absolutely. And lastly, on the biotech front again, we saw that enthusiastic surge in Bluebird Bio's stock.
Oh yeah, that was quite a jump, following an amended deal with Carlyle and SK Capital, right?
Exactly. It really reinforces that narrative that strategic partnerships can be pivotal in transforming market fortunes. Whether you're a long-term holder or a swing trader, Bluebird Bio's rise is a tangible example of how collaborative deals can really turbocharge market sentiment, especially in an industry as volatile and opportunity-rich as biotech.
It's a powerful example. Okay, let's unbundle some of these stories with a slightly more detailed sector analysis. In tech, those data-driven companies and startups are navigating a rapidly evolving landscape, facing both opportunities and challenges.
Yeah, like the Databricks acquisition of Neon we talked about. It's more than just a headline. It's a clear signal that the lines between traditional data analytics and cutting-edge AI are blurring significantly. Companies that can integrate these aspects efficiently are poised to benefit.
Right, and many experts are revisiting their long-term projections on tech stocks because of this. But as you said earlier, there's still that ongoing debate about monetizing AI capabilities. Are we balancing research investment with actual revenue generation effectively?
A critical question. From a financial services perspective, that story about booking 130% profits really sparked discussions around risk management and return optimization.
Definitely. For finance pros, the S&P oscillator remains a crucial tool for timing. But more importantly, that story reminds us to recognize when discipline needs to trump market greed.
Exactly. The financial industry is always grappling with bigger questions around exposure, liquidity, and sentiment, especially when even minor shifts in technical signals can have cascading impacts on trading strategies.
Totally. And the energy and manufacturing sectors? They seem to be undergoing a subtle but significant transformation too.
Yeah, Kraft Heinz's $3 billion investment is a great example of a rejuvenation in manufacturing processes. That initiative is likely to have ripple effects beyond just one company. In today's macroeconomic context, these kinds of moves show companies are willing to invest in modernization and efficiency, maybe in anticipation of future supply chain issues or regulatory pressures.
That makes sense. And it also ties into broader energy and sustainability trends affecting manufacturing, like the Saudi Arabian investment in U.S. data centers and energy infrastructure we mentioned earlier. That's part of a larger narrative about infrastructure modernization and global energy security. It's all interconnected.
It really is. These diverse stories today underscore just how interconnected global financial markets are. What happens here in the U.S. is increasingly tied to international developments, from foreign investment in our tech and infrastructure to fundamental shifts in global supply chains.
Countries aren't operating in silos anymore when it comes to economics. Even a few percentage points change in one region can have far-reaching implications for investors everywhere. Have you really thought about how global events might directly or indirectly impact your own strategy?
It's something experienced investors are constantly wrestling with. And on that note, many analysts are pointing to the potential for continued volatility in equity markets, driven by both domestic policies and global uncertainties.
Yeah, while those minor daily fluctuations might not be huge news on their own, they become important indicators when you view them within a broader trend. They could lead to a more pronounced correction or even an expansion.
Exactly. Like the cautious moves in the S&P 500 and Nasdaq, coupled with the more pronounced drop in Ethereum, might suggest that tech and crypto could face heightened corrective pressures short term. But on the flip side, improved fundamentals in sectors like biotech and manufacturing could signal opportunities for disciplined investors.
It's definitely a market that keeps you on your toes. You know, there's a natural humor in navigating all these twists and turns. I often say,
oh, here we go?
Haha, if you can't find laughter in a conversation about moving averages and earnings reports, you're probably taking yourself a bit too seriously.
That's fair. It's a balancing act, isn't it? Between the sometimes grim realities of market fluctuations and the lighthearted acknowledgement that, at the end of the day, we're all in this unpredictable game together.
Couldn't agree more. All right, as we wrap up today's briefing, let's quickly touch on some key takeaways. First, while major indexes like the S&P and Nasdaq saw slight dips, there's still a lot of opportunity woven across tech, biotech, manufacturing, and alternative investments.
Right. Each sector has unique trends worth watching, whether it's capital flowing into AI, efficiency upgrades in manufacturing, or strategic biotech partnerships.
Absolutely. Second, those global economic and technical signals, like the AUD-USD analysis, are crucial reminders to stay agile and responsive to shifts, both domestically and internationally.
Definitely. And finally, the consistent emphasis on diversification through financial discipline, like with that outperforming stock sale, or using alternative assets, really underscores how important a well-rounded portfolio is in today's uncertainty.
Exactly. Before we sign off, let's leave everyone with a few questions to ponder. Are you leveraging today's market insights to recalibrate your own financial strategy?
How are you positioning your portfolio to capture emerging trends like AI, biotech, and maybe alternative investments?
And, maybe most importantly, have you considered the long-term implications of global interconnectedness on your investments? Remember, every news headline, every data point, it's a piece of a bigger puzzle. When you assemble it carefully, it can really illuminate your path to smarter investing.
Well said.
And I do want to extend a shout out to PantheonAI, really, your information copilot in navigating the labyrinth of modern finance. Whether you're an experienced trader or just starting out, our goal is to give you clear, actionable insights to help demystify this complex market.
And we always welcome your questions. Feel free to reach out to the AI Copilot for any clarifications or deeper analysis on what we covered today.
Thanks so much for joining us on this comprehensive journey through today's market landscape. As we close, remember, learning about this stuff shouldn't feel like a full-time job.
Agreed.
Come back tomorrow for our next episode. Until then, stay informed, stay invested, and definitely don't forget to keep a sense of humor as you ride those market waves.
Enjoy your day and happy investing. PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.